Good evening and welcome to Kenyan Business. Time to take a look at what's making headlines in the world of business. My name is Abi Agina. After a long and bumpy ride in Kenya's Telkom's market, Telkom Kenya looks set to exit the market. Majority shareholder France Telkom has announced it has signed a binding agreement to sell its entire 70% stake in the company to private equity firm Helios. The French operator has over the last 2 years shown keen interest to exit the market, but has on several occasions seen interest from buyers waiver. KTN's Michael Karanja has more.
The date is 14th August 2008. France Telkom has successfully bought a 51% stake in Telkom Kenya for 39 billion shillings and is launching its new corporate identity, becoming the third mobile operator in the market after Safaricom and what was then Celtel. The ambition then, like all the other players in the market, was to tap the nascent telecom sector and grow its foothold in the market. Next was profitability, growing market share, and listing on the Nairobi Securities Exchange in the next 5 years.
Telkom Kenya is to approach differently the corporate segment. In fact, it's obvious for any newcomer in the country that the corporate segment is being under-addressed.
But all that did not go according to plan. The inability to gain market share led to perennial losses, leading to declining revenues and denting cash flows. This prompted shareholders to pump in more cash and write off its debts. In 2012, the government made an unprecedented move to convert part of its debt in Telkom Kenya into equity, allowing the majority shareholder to grow its stake to 70%. The firm, however, continued making losses in Kenya, a fact that saw the French shareholders grow wary of the operations and birthed whispers of a planned exit. Among the reasons given for its planned exit include a contention that the Communications Authority of Kenya had yet to establish a level playing field for all players. Among the first firms to express interest in the firm was Tower News operator Viatel Group, which in 2014 made a bid for Orange Group's 70% stake in Telkom. However, that bid flopped after the firm made what was considered unrealistic demands. And this year, private equity firm Helios initiated talks with the French shareholders, and the two parties appear to have agreed on terms. The two have signed a binding agreement for Helios to buy the entire 70% stake for an undisclosed amount, marking the official exit of Orange from the Kenyan telecom space. The exit by France Telkom comes barely a year after India's Telkom also exited the market, selling off its business to both Safaricom and Airtel. Helios had earlier this year divested from Equity Bank, selling its entire 24.9% stake for an estimated 52 billion shillings. Already the private equity firm has entered into a joint venture with property developer Akon as it seeks to grow its portfolio in the real estate sector. The buyout is still subject to regulatory approval. Michael Karanja, KTN Business.